two very, very special guests, need no introduction. Anybody who's into the investing world knows Nilesh Shah and Raamdeo Agarwal, and both of them are here with me at the campus of SP Jain Institute of Management Studies and Research at Andheri. Nilesh, Raamdeo, thank you so much for joining in. Raamdeo, let's, thank you. Sure. So, Raamdeo, this has been what, the fourth year that we've been doing this show together. We're traveling to Andheri, and does the enthusiasm still remain the same of going back to school and talking to students about it?
This is probably the first event where I reached on time. that shows the enthusiasm. So it's always a pleasure to come to school, and particularly SP Jain, where I've stayed for some time, where I was doing my chartered accountancy. So this campus is known to me, and of course the school is very famous. So it will be really, I want to really see how much the student minds have developed in terms of asking questions about the markets.
Oops, you're putting them under a bit of stress, I'm sure, Nilesh. This is, it may not be your alma mater, but you, I'm sure, come here. Your wife, I believe, used to teach at SP Jain as well. So in a manner of speaking, it's coming back to some place that even you know quite well.
Absolutely.
And
there's a temple in the campus which I have visited many a times. I don't know if all of you have visited it or not. If not, do go and visit. It's really good.
Okay, what about investing, Nilesh? You know, when I was in B school, yes, typically what we used to learn in the finance module in a B school was not so much about ROC, ROE, a basic PE, and then, you know, the normal jargon that we hear. And I'm sure that has increased now because of the increased internet penetration as well. If you were to be teaching at a B school right now, but practical teaching, what would you be telling students to, you know, the 2 or 3 things that they should keep an eye out for if they're approaching investing?
So one, you have to make investment. It's extremely important if you want to be independent from a money point of view. All of us have been told as a kid, money is not everything in life. That's complete bullshit. Make sure that you have made enough money before you make such statement. Number 2, equity investment is a real shortcut of making money, becoming wealthy. And either you can do equity trading or you can do equity investment. My recommendation is to go for equity investment. That's a far sure way of making money, compounding your wealth, creating wealth compared to trading. In investment, it's about promoter, and it's about price which you pay to get the equity. So go with good promoters and try to pay a reasonable price where you have a safety of margin. If you can do these 2 simple things, a good promoter and a reasonable price, and then give time, I'm sure all of you will retire quite wealthy.
Okay, I'm sure it's not as simple as that. And for a lot of you who thought that you know, the fancy world of derivatives, taking puts, calls, futures, options is a short way to making money. Raamdeo just told me something before we entered. Raamdeo, maybe you say that. For people who want a $100,000 job, that's a great thing. Yeah. But
if you want a few $1 million job, then you get to investing. And if you want $100,000 job, then do derivatives, and you'll always remain at $100,000 job. But if you want to graduate, you'll start again in investing from $100,000 job, and to go to few $1 million, and actually to create an institution which could be a few $1 trillion. And I understand what I'm saying. Few $1 trillion. That's where the investing starts.
So Raamdeo, what would you tell them? I mean, what would you tell students right now if you were to be a teacher who's trying to teach them the few facets that they should look at?
Yeah. So I think what Nilesh said is a good starting point. But I think more seriously, fundamentally, one has to understand the difference between value and price. I mean, once you get to the real world of your books and all, then a lot of people, they don't understand difference between value and price. Value is what you get, price is what you pay. And people spend 90%, 99% time on understanding the behavior of price. You must spend 90% time in understanding underlying value. Price is there, everybody knows. In the market, if there are 1 million people all million people by the nanoseconds know the prices, and there is not even 0.01% who know the underlying value. It is very important to understand underlying value. Market is one place where a rupee thing can be sold for 10 rupees and 10 rupee thing can be bought for a rupee. You must understand what is the underlying value, and that's the game. The guy who understands the value and stands by the conviction that this is the value I think, and this is the gap between the value and the price, and hence I will buy or sell and stand by that conviction, he wins. It's a two fight between the practitioner and the market.
So that's a lot for somebody who's starting out his career in investing, right? So, I mean, would you believe that, and then of course the students, when I was a B school student, I always used to get these questions that there are people who are value investors, there are people who are growth investors, and then I'm confused as to what do I want to be, because there are those growth investors who say that, oh, value investing doesn't work in a growth scenario, and there are value investors who say that, growth investing will always lead to downfalls if the market corrects. So, as a student, I was very confused about what do I want to become.
So, at the end of the day, there is only two kinds of investors. One, a successful investor. Other, you know it. A value without growth has no meaning. A growth without value also has no meaning. A pure value investor also sometimes ends up making growth investment. A pure growth investor also at the back of his mind keeps value in mind. So don't compartmentalize yourself. You just try to go into compounding of investment. Albert Einstein, I mean, he's a physics, person, but he also said that compounding is so surprising, it just doesn't stop. It just keeps on compounding. So don't compartmentalize yourself. Try to pick up good businesses where going forward there will be huge growth. So all of us have seen that people moved from scooter to motorbikes. It was visible. And it was visible not just for 1 month, 2 months, 3 months, but 1 year, 2 year, 5 year, 10 year. On that basis, you could have picked up a motorbike company vis-a-vis a scooter company. We also in front of us how private sector banks opened branches, how they collected customers, how they gave competition to public sector banks. Now that trend was visible not just for 1 month, 2 months, 3 months, but 1 year, 3 year, 5 year, 10 year. You could have picked up as many private sector banks as possible, and that would have created a lot of value. So be a keen observer of what's happening around you. See in which direction economy is moving, where growth is coming, and then try to buy those businesses without compartmentalizing yourself that, look, I can't touch private bank because I am a value investor, or I can't touch a PSU bank because I am a growth investor. Who knows, both can make money for you.
Yeah, that's true. And I don't want to get into, yeah, sure.
Can I?
Yeah, please.
Because this is very big concept, the difference between value investor and growth investor.
Sure.
Basically, I mean, the way it has been now synthesized is that growth is part of value. Right. Okay, and there is no investor who is not a value investor. What is a value investor? Value investor is seeing the difference between the value and price.
Yeah.
I mean, and in no investing, if there is no margin of safety, you can never make money. So, value investor, every investor is value investor. You might term it anything, and growth is part of value.
Okay.
That's how it fits in.
Okay, so just to get this maybe crystal clear, because maybe some of these are potential investors as well. I don't want you to comment on stocks, but I'm just saying, hypothetically, a lot of people now say that look at buying into the metal sector. Even if there is no growth, there is value because some of these stocks are trading at sub book. I'm sure these students, when they go into the investing world, will hear these things, that a company is trading sub price to book, it will probably stay this for 1 year, but then go out and buy it because in 2 years, 3 years time it may go up, so on and so forth. As opposed to that, there are companies like iShare, Page and a few others, which are trading at multiple valuations, wherein the value might not be there, but the growth seems to be there. So that is the bifurcation that I'm trying to give. Will you be able to say?
Yeah, so now you're coming to the investing process.
Yes.
I mean, that is of individual guy. Say my investing process is very clear.
Okay.
I don't do anything till I understand that there is a value.
Okay.
So first thing is whether I see value in metal companies. So even say for the assumption, I believe that there is a value, and at current prices of 1/10 or 1/20, 1/5 of what it was say 3-4 years back, today prices are. So if I have a bull case for say aluminum demand or steel demand, and if I think that these companies are going to do well, then I'll go and appraise whether these companies are worth it.
Sure.
You know, but I don't think at this juncture
Right.
that
Right.
commodity companies are good buys.
Just before I throw the floor open for questions, Nilesh, a lot of this crowd is not necessarily finance crowd, yeah. So, but they might be people who will earn their salaries and would want to invest, not necessarily by studying each stock the way that we are talking about, because they may not have the time. For whatever reason, they may not have the time, this, that, etc. How do they approach investing?
So one, you have to start early. By starting early, you have a great advantage. It's like, one day cricket, if you score in first 10, 15 overs, you don't really have to accelerate in the slog overs.
There was this Warren Buffett example that you gave the last time.
Yeah. I've forgotten that now.
Oh, okay. Yeah. So Nilesh, at a event that we did last time, Nilesh mentioned that you all know about Warren Buffett, right? Yeah. So Nilesh gave me a fantastic idea, which I use every investor camp that I do, wherein he mentioned that when Warren Buffett was asked that what is your biggest regret in life, he mentioned that I started investing at the age of 11. I just wished I had started investing 11 years earlier. This is a chori from Nilesh, but yeah, sorry Nilesh, we were making that point.
The second thing is that if you can't spend time on researching stocks, then don't follow the tips to get into these stocks. Then might as well give your money to a mutual fund manager. They'll manage money for you. Stock market requires discipline, it requires time commitment, it requires efforts. Making money is not easy. So try to do investment either on your own when you have time commitment and energy, or come via mutual fund. If you're coming via mutual fund, then try to invest on a regular basis. Every month, save something and invest something. That small amounts which are saving today, over a period of time will end up becoming quite large. So start early, save regularly, and be a long-term investor. If you combine these three things, I can guarantee you that your retirement age or your financial independence will come far earlier to you than what you're projecting today.
Okay, that's a point. And remember, this is for the passive investors. Some of you who are not into finance, who do not necessarily want to spend time doing stocks. Otherwise, there are a lot of other parameters that you need to take in mind as well. But let me throw the floor open for questions because
Just one sec.
Sure.
What he said, you can go to the net and find out compounding machines. SIP calculators are there. You
Yes.
can put what you are see, you are all 20s, say 25 years. Even if you take 35 years, which I have never tried, 35 years is going to be some crazy sum. I have done maximum 25 years. If you put 35 years and you want to have, say, something like, say, 100 crores. Don't think small after 35 years. Think big, say 1,000 crores. You want to retire with 1,000 crores. No, don't laugh. It's very easy. You'll be surprised. You'll be surprised with the number you have to put up. It is not even your pocket money you have to put up. So 35 years, you ask annually if you have to subscribe. I think for 1,000 crores, let me put a guess. It will be, I think, ₹1,00,000 per month. No, I don't know. It will be some crazy number. For 35 years, you ask, you want to go to 1,000 crores. How much you should be putting monthly? That the calculator will give you. SIP calculator. Please do that number. I mean, right now, we'll do it before we leave.
Just to give you counter view, if you had $1 million and you compounded it at 36% per annum every year.
36%?
36%. In 58 years, you will end up the whole world.
Yeah.
That $1 million will become 50 trillion.
Few more planets, I think.
So compounding is that powerful, and 36% is not easy.
36%
That's
is impossible. I don't go beyond 24, 25, but
Absolutely.
even that is, Buffett has done, actually in 65 years, 21% compounded. He started with literally nothing. Today he's at $260 billion. $260 billion is actual balance sheet. His market cap is more like $360, $370 billion in one lifetime. You read his biography, Snowball, then you realize how tough he has come up. I used to think that I have come up tough. After reading that, I realized he's 10 times more tougher to get his first $10,000.
And then he's made a lot of money. I think a lot of marketing students might be thinking, hey, let me just think if finance is actually a better thing to do than marketing. Well, frankly, for me, I attended a session like this when I was in my first year. I was actually hunting for, we didn't have we had a summer internship and then the finals. And my first year, I was in summers. I, of course, shifted to finance because my girlfriend wanted to take finance. But I'm very happy and I'm thankful to her that I did that, because by virtue of that, I was able to come into the stock markets as well and try and figure out this wonderful world of investing.
When you follow your better part, you're always on the right direction.
Yeah, well, maybe that helps as well. Yes, indeed. Okay, let me just ask the students if they have a few questions for our guests. I mean, I have plenty and I can carry on, but maybe some of you have a question or two for either Nilesh or Raamdeo. Raise your hands and let the mic come to you.
I'd like to know a little more, like we have talked about the traditional investments such as debt and equity. I'd like to know a little more about the alternative investments. What's your view on those, especially say real estate or commodities? And say at a retail investor level also, you can participate via exchange traded funds or ETNs. So I'd like to know whether this makes sense, because as we know that it does reduce the level of risk that is there for other asset classes overall for your portfolio. So I'd like to know, how do you see this sector, this part of the investment sector going forward?
So on commodities, my recommendation is please don't invest in gold. Your father and my father have already invested more than sufficient in gold. We are the largest owner of gold in the world without opening Padmanabha Swami temple. We can't afford more gold. So from a country point of view, please stop investing in gold, and our generation should not make the mistake which our parents have made. Apart from that, you should always diversify yourself between debt, equity, real estate, commodity, currency. But at the end of the day, the safety of debt will never give you the acceleration of equity. Today, a gold train is actually in a reverse direction. It's down 42% in dollar terms from the top. It's down 20% in rupee terms. More importantly, I don't know if Indians go to sell their gold, who will buy from us and at what price? Whereas in equity, you are seeing compounding. So at your age, you should be more focused towards risk assets, which will be probably more likely to be equity than real estate. Real estate will always require large tickets. In equity, even if you get 100 shares right, it will end up helping you buy a flat at a later date.
Yeah, hi, I'm Rohan, and so we talked a lot about long-term investing and, compounding money. And for an investor like me who's just about to start off, how easy is it to look at your portfolio every day and you're seeing the intraday volatilities in the past few months? And how do you have the courage to basically stay into the market when you look at your numbers going up and down, going haywire every day?
Yeah. So I think this is a very good question, and it has taken me 35 years to how to negotiate this short term and long term. In the short term, markets are perfectly irrational, 100% irrational. Okay, I mean today something is down, it doesn't mean that actually it might be a terrifically good stock. So in the short run, it is a perfectly irrational, and in the long run, it's a maths. It's that rational. Okay, so it is for you how you. I mean, there are guys who can see every day. You cannot avoid being in the market. We see every day, but it doesn't hurt me. Today, if I am underperforming, I am going down by 2%. It just doesn't affect me. But it has taken a long time for the start. In the starting, you will see every day. You cannot avoid that, but that's the environment. You will be trained in that particular thing. But just keep in mind, in short term, markets are voting machine. In the long run, it's weighing machine. So you want to weigh and earn a lot of earnings, rather than bothering about some, drunkard is putting 100 rupees yesterday and today it is 110 and day after it is 80. So you should not be worried about that. You should be convinced about the value equation you have done.
Yeah, Raamdeo, just wondering, I just, and very quickly, we have paucity of time. I was reading a book recently wherein the guy who's a fund manager in Switzerland was saying that he stopped looking at his Bloomberg screen in his portfolio because he believes that if he's made the right investment, he need not look at the portfolio on a daily basis. He will think about it 1 year, 6 months, 12 months down the line.
He must be living in some village or some mountain, because you can't avoid. Somebody will call up, somebody will talk, in socials you go.
Yeah, but I think the message they was trying to say is don't look at the prices every day.
But
is that the right approach?
That should be, but it is very difficult to practice.
Nilesh?
See, we are fund manager. We are as good as our last 3 months' performance. So I can't stay away from looking at prices. But at the end of the day, as Raamdeo ji mentioned, you have to keep your sanity. If I have bought something at 100 and prices are 90, and I believe the value is still 120, it's an opportunity for me to buy more at a cheaper price. In fact, I should be happy that I'm getting a discount now. It's like, Shoppers Stop sale. You go there on a normal day and you buy something, and next day you see a sale at 30% discount. You go and buy more. You don't go and return your shirt saying that I bought this yesterday.
Okay, the behavioral discipline is very important. It takes a lot of time to, it's there all over. How should you behave? But actually behaving like that is very tough to bring this discipline. And there's so much of cable, and I don't have television because simply because of this. I don't have television in my room because they just keep giving, one after other what you don't want. So you guys,
Oops. That doesn't mean don't watch ET Now, by the way.
Yes. You watch only ET Now.
Thank you.
Yes.
Okay, what more? Okay, yes, please.
Hi, sirs. Sirs, you stressed upon the point that how important it is to find businesses that create value in the long term. So, sir, which businesses do you see in India coming up which will create the most value in terms of long-term growth creation, wealth creation in the coming decade?
Okay, so let me just 2 minutes each for this answer, simply because we'll probably have 2 or 3 more questions and we are running short of time. So, Nilesh, let's start off with you.
So wherever you are spending money, that's where the businesses will grow. So your father have spent much more money on your education than his father has spent on your father. So education is one field where now the spending will increase. So similarly, think about where the monies are going to spend. For our generation, vacation was mama's house. For my kids' generation, vacation is something else. So again, that's where money is going to be spent. My father opened bank account in PSU bank. I am opening in private bank. That's where the opportunities is. So try to see where the society is going to spend their money. That's where you will see the opportunities.
Raamdeo?
Yeah, I think, when you really want to see the amount of money you're going to make in the market is the amount of money the companies are going to make. Okay, that's the first 101. Okay, then second is, now which companies are going to make, so you want to buy the companies which are going to make a lot of money, tons and tons of money. Okay, so first they should be making money. So you have now all the spreadsheets and screeners. You can go to 5,000 companies and come to, the moment you say at least the company is making 100 crores, so you'll find some 350 companies. Okay, then you start knowing, which are the businesses from there, they're coming and all. So of them, say, they'll be coming from all kinds of businesses. You have to figure out which one you understand. Say your dad is, say, in pharmacy, and you have some background in the pharmacy, or you are a B Pharm or something like that. So you have much better understanding of pharmacy business. And you understand because of certain things happening in this country, 24/7 people are falling sick, so they have to buy medicines. And the world also wants to buy medicines now from India, generics and all. So the opportunity is very large. And hence these guys, they will keep making money. And the guys who are making, say, 100 crores today, they are going to make 1,000 crores after 10 years. Once you see that these kind of companies are there, those are companies you just silently go and buy and sit through that entire journey. Now, it is very difficult. I've just told you the process, but I have not given you the extensive list. So that list you have to prepare.
While these guys are learning so much from you, I get to pick up a nugget or two as well, which will help me in my investing career too. So it's a pleasure doing this show every year.